As Kenya kicks off the 2016-2017 financial year, the government has unveiled the Finance Bill 2016 containing a raft of new tax measures majorly aimed at improving tax collection. I spoke to Gareth Harrison, Associate Director at PwC, on the contents of this bill. Let's talk about the Finance Bill, 2016-2017. The government, of course, looks forward to a budget of 2.3 trillion shillings. We're going to see 1.5 hopefully come from taxes. But when we look at the changes like in the income tax, what would be your thoughts on how exactly we are facilitating the income earners to pay tax in the country?
Okay, so there was a number of changes particularly affecting low-income earners. Those changes shouldn't have a material impact on KRA's ability to meet its targets, because the changes to the bands and the exemption of bonuses and overtime was relatively modest in its application. So those parts of the finance bill that have been offered shouldn't really impact too heavily on KRA's ability. What's really going to be the key to KRA successfully meeting its budget is its ability to broaden the tax base. So they've got a stated aim of taking the number of taxpayers from currently 2 million to about 4 million. And that's quite an ambitious upscaling. But that will be key to whether or not they're able to successfully address the taxation of the informal sector and also bringing other specific areas of the economy into the tax net.
Is it becoming easier to pay tax in this country, especially when you look at the informal sector?
I mean, the key development, of course, has been the introduction and mandatory usage of iTax. So the online platform that is available to all across the various tax returns that are required to be filed should make it easier. There's one caveat to that statement, is outside urban areas, access to internet usage, education about how to use the iTax platform is still patchy. And so therefore, in rural areas, there's still, I think, challenges for people to know how to use it and be able to access it. But nevertheless, iTax should make a difference in terms of making it easier for people to file their returns online, to pay their taxes. And in some ways, Kenya is very much a forefront of development of online tax tools available to the taxpayer across Africa. It's really at the cutting edge of what's available for taxpayers.
Let's talk about the increment of the tax relief to about 1,280 shillings per month. That's about 9% increment from where we've been. Do you see this as being effective, especially to the taxpayers, because we're also talking about the rising cost of living?
Yeah. It's not ambitious. The rise has not been an ambitious rise. The argument could have been for a much higher rise, to take into account the fact that there's not been significant rises in the bands for some number of years. It's a phenomenon called fiscal drag, whereby if you don't raise the bands in line with the rise cost of living, more people get caught into the tax net at the low end of the spectrum. So it's something that the government and the Treasury could have addressed bit more fully and made the increases larger, but perhaps we are seeing maybe the first step in a journey over the coming years.
Now the taxman is finally hoping to enforce a 10% tax on rental income. We know that landlords have been elusive on this. How can the taxman, break into this market and collect taxes?
Yeah, well, I think they obviously see this as a key sector where they can broaden the base. And increase revenue from a sector that's historically been a poor contributor to the KRA's targets. And they've put in place a number of mechanisms by which hopefully they will be able to understand who the landlords are, understand the levels of their income, and be able to tax them fully on the income that they're earning. So there are some positive steps there that KRA are taking. It's just, again, if someone wants to avoid the net, they will find a way to do so.
What would be your thoughts on tax amnesty on income earned outside the country? I know the government has promised not even to question the source of this income.
Globally, amnesties have been criticised because they produce the wrong kind of behaviour. Yeah. So whilst we understand some of the drivers behind why KRA want to put it in place, whether it's remittance of cash or declaration of income, we question whether or not it's actually going to be successful in identifying the types of individual they're probably trying to bring back into the Kenyan tax net. Again, we come back to this point. If somebody doesn't want to declare something, they will find a way not to do so.
Now, there seems to be a renewed effort to revive the tourism sector. There will be VAT exemption on park entry fees and services of the tour operators. There's a big debate whether it should be exempting or zero rating. Your thoughts on that?
From a VAT perspective, there is a difference between exemption and zero rating, and actually the impact long-term of exemption can be detrimental, and actually costs can rise. So perhaps the intended policy benefit will not accrue to the industry if the cost base actually goes up. So it's a complex issue, and it's one that we would encourage KRA to revisit, really, because this issue of exemption versus zero rating is one that they really need to get to the heart of.
Mm-hmm. Let's also take a look at the 10% reduction in corporate tax for, of course, the firms that are hiring new graduates, coming from the university and all of that. Right now, if you look at corporate Kenya, there's a wave of retrenchment going on. Companies trying to cut on their wage bill. When you speak to companies, when you give them advisory, is it something they are willing to take up?
We've seen a relatively slow start on this one. So the regulations that are going to govern the scheme are very new. Whilst the policy objective's been there for maybe 12 months, the practical regulations are not there yet. And you know that corporates' cycles, hiring cycles, are typically annual, particularly where graduates are concerned. So there may not be any activity on this until maybe into 2017. So there's interest in the scheme, but whether it's going to manifest itself quickly is debatable.
The country is looking at a budget of 2.3 trillion shillings in this financial year, and 1.5 of that will be raised through taxes. And as a result, we have now the new finance bill that will make sure that the taxman achieves that. We are seeing changes in the Income Tax Act. Your thoughts on that?
What we see is that actually the drives towards more efficiency within KRA, the better use of taxpayer data, they're going to be really the key to whether or not KRA is going to expand its taxpayer base and expand the amount of revenue that it derives from those taxpayers. Those are core aspects of their ability to meet their target, rather than tinkering with codes, changing VAT status here, changing VAT status there. There has to be, with an expanding economy, a growing economy, there has to be a more disciplined approach to how you approach the taxpayer.